You're listening to the Breakaway Wealth podcast, the show that helps you build wealth faster, think outside the box, and break out of the herd. Here's your host, Jim Oliver.
Welcome back, Breakaway Wealth. I'm your host, Jim Oliver, and with me today is my co-host, Nick Costco. Welcome, Nick.
Thank you for having me. It's a pleasure to be back on.
So, Nick, we talk to people about infinite banking and real estate, and we talk to people about investing in Wall Street, maybe cryptocurrency, gold, silver. People ask questions all the time about what they're in, what they should invest in, where they should put their money, how their money should flow. But what are we all trying to solve? What's the problem that we're all trying to solve?
We're trying to solve the problem that we finance everything we buy. What we're really trying to do is we don't really put this all together, but what's happening is all this money is flowing away from us in our lives. We're trying to solve the problem. We want to get that all to turn around and come back to us. So when people are talking about invest in this or that, it's almost a little bit of noise. It's kind of missing the point. We have to solve this problem of financing everything we buy first.
So, yeah, I agree with you. But do most people know that that's the problem? Or do they think that the problem is getting a higher rate of return in their investments or putting more money in their investments and hoping that their accounts grow?
Exactly. It's just like, when we talk about Dave Ramsey, it's like we only think that we can slow down the spending or increase the amount of money coming in. That's what we focus on.
Right. And so most people, because they go their adult lives down the wrong path, at some point in time, they kind of wake up and they say, wait a minute, this doesn't seem quite right. And, where should my money go and how do I get money to flow back to me? And it seems like this daunting problem that they don't really know how to solve.
It's funny. We've talked a lot about this lately because in this times we're living in right now, there's just a ton of noise, right?
Right.
And there's a human problem that we have to overcome. And we have a great friend of ours that he asked me once, he said, hey, what's in that glass? And I told him we happened to be having a beer. And he said, well, if we knocked that glass over, what would happen? And I said, well, it would spill. And he said, well, what would spill out of it? And I was like, well, the beer. And he says, why? And I was like, well, Newton, gravity? I don't know. He goes, well, that's because it's what you put in it. And it's funny because sometimes it's a little perplexing for you and I when we're talking to someone because they think we're a little nuts. But the reality of it is,
I think you're nuts, but I don't.
That's all right. I'm used to 43 years I've been hearing that. So it's just kind of funny. It's sadly funny. We're bombarded with the information that says, give me control of your money, right? And that's what people fill themselves with every day. They read the financial headlines, which are mostly consumed of stock information, right? It's rarely talking about how people really build wealth, which is business ownership and real estate. But like, how do they do that? Like, what do we have to, how do we wade through that? And what should we focus on?
Yeah, I mean, that's the key is distractions, right? I mean, what do they do with the kid who's distracted in school, in the classroom? They either remove him from the classroom so that it doesn't distract all the other kids, or they get him to focus on what he's supposed to do, right? And, it comes down to what is easy and what is right. Now, what is right is not always easy, right? We always say that it seems simple, get money to flow back to you instead of away from you. Well, simplicity is elusive, right? So how would we do that? Well, the first thing that we have to do is we have to take responsibility. And we have to realize that we're going to have to participate in this project, just not just fund it. And that's what happens when you give your money to a financial planner or a stockbroker or somebody like that, who's going to take your money, put it into an account, and then they're going to meet with you once a year, and you guys are going to hope together that this thing grows. And the whole time they get paid, and you have all these eroding factors. And then at the end, and when I say the end, because people think, well, I'm going to save this money until I'm 65 or 70 or 60, and then I'm going to live off of it for the rest of my life. And then they get to about 50 and they say, well, gosh, you know what? I'm a little bit behind. And then they get to 55, I'm still behind. I'm 60, I'm behind. 65, I'm behind. Now what do I do?
Right.
And that's the people that are in the herd that haven't broken away. They are stuck in this pattern that they've learned. And they've learned it from thousands and thousands of ads and thousands of articles of noise that are out there trying to distract them from what they really should be doing. And, it reminds me of the story in the very beginning of Richard Bach's book Illusions. And he talks about these villages of little creatures that cling to the rocks and the roots, and the crystal stream brings them everything.
Right.
And this one little creature, he says, I can't keep doing this. I'm going to let go and see where this crystal stream takes me. And the other creatures laugh at him and call him stupid. And hey, surely that stream, that river that you worship will surely kill you. And you'll get battered and beaten by the rocks, and surely you'll die. And he says, if I stay here, I'm going to die of boredom. So he lets go. Right? He lets go, and he gets beaten, battered by the rocks in the stream, but pretty soon the stream kind of lifts him up to the surface, and he's just flying down the stream, like just floating, and it's everything that he could have hoped for. Well, then a little ways down the stream, he sees another creature or a village of creatures like himself, and they all yell out, "Messiah, come to save us." And he said, "I'm no Messiah." And I'll let the rest, if you want to hear the rest of the story in the book. But the point is that we see people like maybe Robert Kiyosaki or one of these other kind of, wealth coaches that are entertainers on social media and YouTube and everything else. And we say, gosh, we want what they have.
Right.
Right. But we're not willing to let go, or some people aren't willing to let go and break out of the herd, break away from the herd. But when you do break away from the herd, then you realize that, you're going to have to learn some things. And you know what? You might make some mistakes. Those are the rocks that you're going to get battered by. But you're going to learn over time, as long as you keep on trying, and you kind of fail your way to success. And I'm not saying you have to fail your way by losing a bunch of money, but maybe you tried to buy a property and somebody else got it, or you didn't do the due diligence that you needed to, or you didn't know how to do it, so you didn't pull the trigger, and somebody else got that opportunity. That's kind of failing to a win. Does that make sense?
Yeah, absolutely. You got to take a swing of the bat. It's okay to not hit them all out of the park.
So, the thing that we do with infinite banking is we have this place to hold our money that has a lot of advantages that other, quote, investments or saving vehicles don't have.
Yeah. A lot of misconceptions, a lot of noise out there, diverting your attention away from what really should matter. And this is kind of like an opportunity to kind of be enlightened a little bit about what maybe will benefit you to focus on.
Yeah, and it's funny because I've had some clients and prospects go to their current insurance person, and then they come back and they say, well, this is just overfunded life insurance. And it's like you're missing the point completely in the fact that you let some life insurance agent tell you that knows nothing about infinite banking is almost sad, because that's what these guys on the YouTube and the internet make mistakes, is they focus on the life insurance contract so much, and that's just the money pool. It's your behavior that is the most important part of this. It's your activities. It's what assets you're going to buy, how fast that money's coming back, how fast you can redeploy it, exactly like the bank does.
Yeah, just like Nelson belabored, infinite banking is not about a product, it's about a process.
Absolutely.
But go ahead.
No. But the process is supported by the money pool. If you don't have the money pool, and you don't have, and the money, or the money pool is too small, then you can't do all the things that people want to do on the other side of the ledger, on the activity or the behavior side of the ledger.
Yeah, it's like we're working on compounding our results, right? So like if I have my home, the better the foundation to build the home on, the safer the home is, right?
Right.
Right. The second story, the third story, whatever it is for your home, you got to build a great foundation to support all that.
Yeah.
And we always say you can do infinite banking with your shoebox money, your mattress money, your CD, your checking account or whatnot. But, if we can build it on the best foundation so we get the most benefit from our behavior, then that's what we should do. And most people just don't even understand the product very well. But you kind of summed it up before. You said you called it the perfect investment. Now, it's not necessarily a claim per se, but it's just, hey, this is the perfect place for us to do this.
Yeah, and the reason is you got to look at, when people think of a place to put their money, what's the first thing they think of? Rate of return.
Right.
And compared to what? Because is that your average rate of return? Is that your gross rate of return? Is it your net rate of return? Your rate of return is, let's assume that that's acceptable. What are the other things that you got to protect yourself against, or the features that have to be in this vehicle to make it work? The number one thief in the world, or at least in America, is the IRS. So guess what? You have to make sure that your money's growing tax deferred as opposed to taxable. I mean, think about it, Nick. If every time you earned, 10% and you had to pay tax on it,
right,
you're not making 10%. And over a 20, 30, 40-year period, taxable versus tax deferred is huge.
Yeah, absolutely.
Now, tax deferred and then taxable at the end is not what you want. You want tax-free distributions. You want 0% tax bracket when you're taking the money out.
Jim?
Yeah.
What's your tax bracket going to be 25 years from now?
I have no idea.
You have no idea, right? Like in any investment, you have no idea, right? So what you're telling me is you don't want to put something in a tax deferred vehicle right now, like where you're going to pay the taxes 25 years from now. Is that right?
Right. Exactly. I want it to be tax-free distribution. And the thing is that, Nick, not only do I not know what the tax rate's going to be, but I have no control over it.
None.
Zero, right? So whatever they tell me it is, I have a choice. I either pay it, or I guess I don't pay it and pay the consequences, right?
Right.
So I don't get a choice. I don't get any say, anything else. That means I have no control. If I don't control my money, guess what? I lose my money.
It controls me.
Right. Now, we've already said that you want a competitive return, but what's competitive? I mean, competitive return versus risk versus advantages in use of the vehicle. A competitive rate of return when I have no use of it has to be higher, because that's the only benefit that I'm getting is some future balance, right?
Right.
I mean, the other thing is that there's a lot of cool little vehicles out there that you can't put enough money in. So, I mean, you have to be able to put high contributions. You can't have these things. I mean, if I can only put $5,000 or something into a vehicle, then who cares? There's not enough money there to get any real benefit from it.
Yeah, that's why we have clients that put millions of dollars a year through this.
Right. Well, and if you're going to put millions of dollars a year through it, then you want to make sure that you have some additional benefits like, long-term care, terminal care, illness protection from creditors. I mean, you want to make sure that, can you imagine if you built up this huge money pool and then somebody could take it?
Right.
I mean, again, we can't have unknown in the future. We can't hope. Hope is not a strategy for anything.
But I always say hope introduces failure as an option.
Absolutely. And, I heard somewhere hope is not a legitimate word, or it's not a legitimate idea or something like that.
I go round and round with my old pastor friend about the word hope. When you look it up in the dictionary, there's the normal society answer, definition of hope, and then there's the Christian definition in there. So we spar back and forth about that.
I'm not going to touch that one because I know that's going down a rabbit hole. But how about collateral opportunities? I mean, I remember that I had a company that needed some money. I had an opportunity to collateralize an asset, and guess what? The loan paid for 2/3 of the asset. Okay, so if I can collateralize my perfect savings vehicle, well, that's huge. That's massive. I mean, there's not very many things in the world that you have those opportunities.
To what percentage can we collateralize this?
100%. Now, by the way, if you had a bond account, like at the bank, it'd probably be about 80%. A stock account, they might collateralize 50%. And the bank might decide to give you collateral on some type of muni bond or CD or whatever. But what's the consistent theme of what I just said?
Control.
The bank decides.
Yeah. Right.
The bank might give you this and they might give you that. Guess what? Until they don't want to give you that.
Yeah, in the life insurance contract, it's a contractual provision. We get to do that without their permission.
That's right, without their permission. Exactly. Here's the other thing is, when you think you said something there, the life insurance company, you want your money to be safe. Do you guys realize in the audience the reserves and the protections and the regulation that these insurance companies go through to make sure that your money has a safe harbor? And you can't put your money in a safer spot than with a mutual life insurance company. It's off of the IRS's radar. It's out of the reach of creditors in most states, and you can't lose money.
Yeah, I got to tell you, Jim, a decade plus ago, after going through Financial Peace University, which turned out to be a heck of a learning experience about how not to do a few things. But, I was just so ignorant on the strength of these insurance companies and how you can use them and to partner with them to build wealth. Not just use it as a commodity. And it's such a misunderstood thing. And, it's always funny. People say, well, I put my money over here in this bank because it's FDIC insured. Well, the reality of it is the FDIC has less than 1% of their liabilities.
That's right. Yeah. So you're not protected in the FDIC, and you're exactly right, Nick. Here's the thing too, is you said this earlier. Would you want guaranteed loan options so you can't be denied access to your money? Meaning, we don't want somebody saying no. We don't want no to be an option, right? We want access to our money. And then
Yeah.
when we take those loans, I don't want the bank telling me what I have to pay back and the interest that I have to pay back and on these terms. I mean, I want to determine the payment schedule. It's my money that I'm collateralizing, right? And I want control.
Yeah. Go ahead.
No, that's just so important. I mean, liquidity and having access and control of your money so that you can use it to make money is really a huge key.
Yeah, I think the unstructured, we use this term unstructured, and like, what does that mean? It means that the bank doesn't say, hey, you're going to pay me $217 a month for that loan or whatever it is.
Right.
For 5 years. It means that we decide, like when we take a loan from our policy, we decide how much we want to pay back every month. If we pay back anything, we have that freedom and control. And, you think about, the audience, you're sitting there and you may have a home, a mortgage, auto payment, boat payment, business lines of credit, rental mortgages and whatnot. And you think like, hey, what if I couldn't pay this month? What happens? What are the consequences? And that creates, that thought process can create stress for people. And, Nelson would talk about how infinite banking really creates this stress-free, peaceful way of life. And when we think about it like that, like, hey, if my only loans are to these life insurance companies, and that I've set the rules on the payback, and life happened, and I couldn't pay my bills this month, couldn't pay any of those, but then nothing would happen. Nothing negative would happen if I didn't pay them. That's a different way of thinking about money and thinking about debt and being a slave to the lender. It's very peaceful to think of it that way.
Absolutely. And what you're saying, Nick, is you're in control of that rather than somebody else. And when you're in control of your own destiny and you're in control of your future, then you can always make sure that you make your future bigger than your past. So it doesn't matter whether you're 30 years old or 60 years old, you always want your future to be bigger than your past. So in becoming your own banker and setting yourself free financially to build financial independence, you can do it in a much shorter period of time than trying to build up this pool of money like a lot of people are trying to do. And one of the reasons, Nick, is because all of those eroding factors are working against you to build up this huge pool of money. And then when you have it, all of these eroding factors are trying to deploy it faster than you want, meaning you're going to run out of money. I mean, and then you know what? When you figure that out, hopefully you're not 70 years old.
Right.
Because then it's harder to recover. If you can do this in your 30s and your 40s and your 50s, and if you could do it in your 20s, then God bless you. You're going to be way ahead of the game. But we can still help people that are in their 60s and 70s. By the way, it's just it's crunch time. It's time to go. Right. Nick, any books that you've been reading lately that, or any articles out there that we could, offer if somebody wants it, anything that you've been just standing out to you?
I've really turned off a lot of stuff lately, frankly, but I will tell you that probably my favorite book that I've read this year is, by Tim Grover. It's called Relentless. I've actually listened to it twice, and it's really helped. It's a mindset book, and it's not about finance at all. It's about having a plan. It's about having a vision, and it's about having the mindset about what it takes to go achieve that vision. And it's, for me, it's like what we talk about with our clients is we want our passive income to meet or exceed our ideal standard of living, and give my family something they never dreamed they could have. And So that's the book that I would recommend you pick up. It's not for everyone. It's not for the faint of heart. There's some harsh language in there.
It's an adult book. There's adult words in there, right?
It's an adult book, but I tell you what, it's I think a lot of our clients, it would really resonate with them because they come from that mindset of doing bigger and better.
Absolutely, I like it. So, Nick, if somebody wants to talk about some of these concepts that we've talked about today, or where they want to learn more about infinite banking, how can they reach out?
Yeah, just go to createtailwind.com. Right up at the top, it says contact us. It'll come right to us. You just put in a couple of bits of information, maybe a comment or two about what you're looking for, and we'll get with you. We'll schedule a 20-minute call to answer your questions and see how we can you'll hear how we work and how we can show you the road to taking control of your finances in an uncommon way.
So if somebody could go from what most people are doing, trying to build a pool of money, to using a pool of money to build assets and financial independence, that's what we're passionate about. That's what we're trying to help everybody learn how to do. And until next time, audience, Breakaway Wealth, thank you so much for listening. Go to our website, createtailwind.com. Look for us on YouTube under Create Tailwind. We've got quite a few videos up there. We're adding more information and more substance every day, or every week at least, Nick, I think. So reach out to us. Let us help you learn how to do this and get rid of the noise. Nick, thank you so much for joining us today. And until next time, break away from the herd.
Here's the key to success and the key to failure. We become what we think about. Now let me say that again. We become what we think about.
Thanks for listening to the Breakaway Wealth podcast. Be sure to subscribe to this show wherever you're listening so you never miss an episode. If you want to start increasing your wealth building ability right now, go to community.createtailwind.com to join our free online community and get access to free, in-depth training designed to help you build real, lasting wealth. See you next week.